Hello everyone, welcome back to Sumit Crypto channel here. So today we will observe about what is going on in the Bitcoin market on the daily period. So this is the Bitcoin chart here. As we discussed in the last video on weekly basis, we drew some line which spoke about the possible levels for the Bitcoin. So first was the 104,000 and second level was at the level of 74,000. So these are the prime levels where we'll observe what's going on in the market and how we should navigate from here. Now we will first draw the channels here. These are the two channels under which Bitcoin is drifting down while it has stopped in October, and since then it has touched various levels 1, 2, 3, 4 and down channels over here. So these channels are taking the price level down in the markets, and we have to keep that trend in mind while taking positions here. Now, the next thing we will do is we'll draw the moving averages here. So the broader one is the 200 moving average, which is the exponential moving average. And this one is the 50-day exponential moving average. So I tend to use exponential moving averages on daily charts and simple one on the weekly charts. So that's the thing I work with here. Now again, we will see at the levels at which this drift has broken many a times here. So let's take an example. So here, while there was a flash crash here on October 10th, since then the market tried to gain its mojo back. It's trying to gain its momentum back, but that level at that point of time it again broke down, and again over here, though it was a small one, they were trying to regain its momentum, going back to the level touched here and drifted down again. So this tells us that we are stepping down in a systematic manner, and this part that we are dealing with is no different. It is again the same thing that we are seeing here, that the market has formed a channel, pennants. Pennants are typically a pattern which has formed in the trend. Currently the main trend is down. Pennant are the counter direction movements that happen, and currently this is what it is happening right now. Now we have established that we are in the down channel. We are moving against the downtrend right now, and we have to see whether this is going to break up or it will continue going down. It's just the way it did here and did here. Let's take the volumes here. So this is the volume chart which speaks about what's going on in the market. So it's very important to see how it is working. Since the flash crash of 10th of October, you can see that when the market was drifting here, it was actually the volume were shrinking. So there was hardly any high spikes which was countering the recovery, and so it crashed. The volumes crashed, then it spiked because of the down candles that we can see. It again shrank here from this point to this point till we again saw a spike of volume. And then the final candle that took us to 80,600, and after that again market was dried up with volume. There was no volume at all. It was just drifting here and there with decreasing volume. Now two interesting things happened after that. So even though there was a after this down candle there was a good recovery, but after this again the volumes were not very good. It was just shrinking. But since last 3 days we have seen that the price are going up along with a volume build up. Now it can happen because of the FOMC meeting that is coming up, and anticipation is building up here, but we don't know. The thing is, if we have to consider 80,600 as a base case, and we can see, if we have to believe that it is the bottom here, then the problem is this period has shown a very less kind of volume in last 17 days. It has not seen a lot of recovery, and we will try to find out whether this is a bottom, this is in the making of double bottom, or it is just a continuation and drifting towards 60,000. So this 17, if you have to take the average of these 17-day volume, and we will do it right here. Since till yesterday, the volume was 19,000 volume of Bitcoin that was trading every day. And this becomes the base case. That means that the volume is very average. If we look at the past, this level has been shown that we are just trying to hang around without any volume here, and any volume that spikes above this 19,000 would speak about whether there's a change of trend or there's a continuation of trend. So we'll keep that in mind. That is going to be important here. The second indicator that I use as for momentum is the RSI one, the RSI 14 setting. That is a standard one that I use. And we can see here that since it's supposedly bottom, it's going up and it has touched the 50 level. So we normally consider anything that below 50 as bearish and above 50 is bullish. So we are at the verge of deciding whether the market has to continue going up. We have done with the correction, or we have some more pain to observe on the downside. Now, this is the thing we have established here. Now we have to understand few scenarios here. What can happen with all the news that are coming up and the price action that we have seen? So we will take few scenarios here. First would be this is also one thing that I forgot to mention here, which is very interesting. So before everything else, when the breakdown was not happened, we were in the regime of a formation of megaphone. That means there was a higher high, lower lows, higher high and lower lows. Even crash took us to this level and bounced back. Now with this candle on 14th of November, we broke down from megaphone and drifted down to 80,000. And yesterday with the small rally that we saw that it took us back to the megaphone. It tried to enter the megaphone, but it was again rejected. So at least at this point of time, the prices were failed to cross and enter the megaphone, or they failed to cross the down channel that we saw yesterday. We are waiting for some news which can take us beyond that, and which can give us the first hint of if there is a change of pattern, change of trend here. But so far we have no idea. We can't safely say that we are breaking through the towards the bullish zone here. Now, taking the scenarios here. So I have three scenarios which we can ponder upon right now. First would be the bullish scenario. Now, we know that we have a FOMC meeting today, and at least 87% probability is there that there will be a rate cut. There could be 12% of probability that there is no rate cut. And of course, there is no rate hike probability here at all. So, and more important would be the commentary of the Fed chair, whether the outlook going forward would be dovish or hawkish. So we'll have to take that tone into consideration as well. So this bullish case says that probably we may break up and touch the high of this pennant and towards the 50 moving average, trace down to the to this level. It could be here or here, and then jump back towards the 104,000 kind of level. This is a bullish scenario. Probably some dovish kind of commentary, and of course the rate hike may trigger this kind of event, but we have to see other factors as well, which will be the volume. If there's, this candle is in the making right now, and of course this is going to be a candle with a lot of volatility and high volume because of FOMC meeting. With this rally, we need to see a volume which is higher than 19,000 kind of figure, and a shallow volume during this downtrend. And of course, when this happened, this leg of upside takes place, the volume should be high, and since it's a resistance, we'll see a big candle, volume candle here. So that is the first scenario that we can think about. The second scenario, of course, the RSI will of course break out of the 50 level zone and keep trending up if that has to happen. We cannot comment beyond this part because we don't know what will happen. Probably there is a change of stance here, but we will keep it simple here. The second scenario would be if there is, and second scenario would be the bearish one, that the market react favorably with the FOMC meeting, the commentary, but again, as it happens, as it is happening with the Bitcoin in last 3 to 4 months, with every good news and neutral news, whether S&P going up and down, gold going up and down, it always come back, it always corrects. So it detaches itself from the good news or something. So it may touch the 50 EMA, come back and test the channel here, and small bounces, and of course the breakdown of the channel as we saw over here, as we saw over here. The volume pattern would be, this is going to be the high volume one, no doubt. This could be also high volume, this could be low volume, and this would be good high volume, some candles like this one or this one or this one. So we have to keep that into consideration. On the RSI, of course, it may break out for a while, something like we saw over here. It touched 54, 55, then again broke down, broke the trend line, and drifted towards the 30 level on RSI. That may also happen. That is, it has a good chance of happening. So we have to position ourselves accordingly here. The third scenario could be wherein there would be some bad news coming in the market. It could be like, rate cut is there. We are factoring in that. Probably it may not come, or the tone of the Fed chair would be too hawkish, and then there will be capitulation. So it may drift down to this channel, again try to jump back, and then there will be a final breakdown from here. With volume, we have to keep 20,000, 19,000 volume as our base case to see what's going on at least in the next 5 to 7 days. This volume has to come with a high candle, with high volumes, shallow candle, and this is going to be even bigger candle in terms of volume. So these are the three scenarios which I think, and I'm positioning myself as a trader in the markets right now. Now, what may come beyond that? That is going to be a good question as well. There is a good possibility. I mean, if you look at the March-April correction over here, even here in the first leg of going up, the first correction that we happened, there was no volume in the market. It was a very, very tepid volume. This was like very bad volume going on. We may be having this the same case here, because the first leg of recovery can be accompanied with low volume. And then, of course, there was this correction back to the support level, and then came the good amount of buying for the on the charts. I know, two big candles, and then subsequent candles also supported that. And then we broke out of this double bottom. Once we broke out of the double bottom, we climbed up to see all-time high of $120,000 here. Now, there's a scenario. What if we have a bearish case going on, and if we follow the same kind of pattern, what would it look like? That is the question here. So let's take the bar patterns right from here to here, drag it down to our current situation where first bottom at 80,600 has already been made, and with this we may try to see what may come. Because one thing is for sure, if we have the scenario wherein we are going down two bearish cases, then there's a high chance that we will be revisiting the 80,600 level again. I'm not saying it will go beyond, I mean, it will crash from there. There could be a good buying, because this level does support a lot of buying in the past, and we may try to find support, but in a very messy manner, that is for sure. So there could be a scenario wherein we'll drift. We have been going through this thing, and then we go crashing down there, and then we will observe again a double bottom at the level of 94,000, and then we'll resume our uptrend. So these are the observations that I have for the market. We have to keep an eye on the volume a lot, what is going on, whether it is shrinking or expanding, in what leg it is expanding and shrinking. We can take the historical perspective as well, and then we will take the trading methods based on what we observe with daily candles forming. So we'll keep the horizon only for a week or so, then we will try to revisit this chart again after a week. So thank you guys, thanks for being part of this channel, and we'll be posting a lot more stuff going forward here. Thank you.